Let's take a look at small green lentils. My name is Trent Klarenbach with Klarenbach Research. Today is February the 22nd, 2025, and we'll look at our member area of the website for our small green lentil analysis. And we publish our sentiment, and we have our sentiment broken out in 2-week increments. Our sentiment is neutral over the next 4 weeks as we wait to see if the price continues consolidating sideways, or we get some strength in the buyers pushing the price higher, or the sellers went out and the price moves lower. We're going to be bearish in the longer term time frame. You can see here that we're going to publish a bearish sell signal here for today. We track our analysis. Again, our KPI, the current price is just slightly below the average price for the year, which is kind of interesting. Maybe you could say they're the same price, but nonetheless, that's where we are at. We've introduced some new charts here, and you're going to have a difficult time reading the axes, but again, this is what I think these charts are somewhat valuable. This is a yearly chart of small green lentils according to our index. And yeah, you can see we're definitely trading in the, I would say the top 25% of the market. The top of the chart really is where we're still trading at. You can see, there's some volatility in this market. It's quite interesting. The reason I use the candlesticks and not the line charts, they actually show a little more information. The line chart will just show you the closing price for that period. Well, the candlestick charts will actually show you the open and the close, and you can see the full range of the price for the year, which I think is absolutely invaluable. This is the quarterly candles, and this, quarterly means every 3 months. So you can see, again, it shows you a little bit more information. It's a little noisier, but yeah, you can see that we're well off the highs. There's a huge gap here. I don't know if the gap's going to get filled in special crops, but it's something to just be wary of. There's a long room to go down below these prices to get back into the traditional trading ranges, and I don't believe commodities are really that subject to inflation over the short term. So I do think that this lower range will be tested at some time. This here is the monthly chart. Again, a little more wiggles and squiggles in it. And again, you can see the green candlesticks show the entire price range for that particular month. And interestingly enough, take a look at this is the 200-month moving average, and it hasn't really told us much. It told us a little bit here back in, when was that? 2022. But, look at that's trading around that 35-cent level. So, I think that's interesting. And it might show more in this chart why that is interesting. So I'll go back to this chart here, the VARs that we created, because you can see the y-axis a little bit better, a little more definition in this chart, although it has less information. But it's a line chart. It's a weekly chart. And we are publishing our sell signal, a bearish sell signal at 49 cents. So if we break below 49 cents, then I anticipate this price going lower down to this green rectangle. This kind of, I'll say the level of interest, or if you want to use price target range, go ahead. But it's 34 to 38 cents is the range. And I do think that, it's an area of interest to me. There's technical reasons why I think the price will get down there. I won't get into all of them today. But I did outline this green price path here, which I think could happen. So if we hold above 49, above 50, then I think, we might actually get a rally from this level back up to, say 60 cents or close to it, a bit of a pullback down to this previous support. And then I think we can get a rally up to that 62-cent mark. But we need to see what happens first. Those are two ideas. It's a bullish scenario. We go up to 62 before we get the sell off down to this green rectangle. Now, when I do my price analysis, you might be looking at the bottom axis to see when this could happen. This is just a price path. There's no indication of when that will happen. I don't believe that's conducive or accurate. I think it's great for generating headlines, making price predictions, and when that'll happen. But from my experience, the track record of those doing so is suspect to poor at best. But keep an eye on that 49-cent level. The 50-cent level is important because it's a round number. It's going to be psychologically important. You break below 50, people start selling. But we have previous support here at 49, and there's some other technical reasons why I think it could act as support too, but that's what we're looking at. So we have a bearish sell signal at a break below 49 cents. If you want to get a little more aggressive and sell below 50, that'd be a perfectly good idea as well. My name is Trent Klarenbach, sunny in Saskatoon. Life's good.